Hi, everyone. This is Rob Roy of Elliott Wave Options, and welcome to the U.S. Market Live. As we do each and every week, the stocks that you see on your screen will be the stocks featured in this video. And all you have to do, if you have a particular stock you're interested in, is click on it, and you can go directly to it using the chapters feature in this recording. Lots to talk about this week. Been doing some traveling, a little bit stuffy, so if the nose is a little bit off, then I apologize for that. But let's go through and talk the markets. Well, we had some economic data released this week. We had the private payrolls number, which is the ADP report, which came in and gave the market a little bit of a bid because it was lower than expected. And then today, we had the government's non-farm payrolls report, and it showed a higher number than expected of jobs added. What's the difference? Well, the private payrolls is the private sector, and the government's number adds in government hires. And even as much money as we're spending in the government, we're still continuing to hire people for some reason in the government. And that put a little bit of a shock into the markets. And as we take a look at the chart, you can see that we opened lower. We did trade a little higher throughout the trading day, but then we closed a little bit to the downside based on that number. So there are some concerns. There was some Fed speak today, but it was ex-Fed members. It wasn't current Fed members that said don't expect rate cuts anytime soon, maybe December at the earliest, and that they left the door open for the rate hikes. Well, the market didn't seem to like that. And then we moved lower. And as a reminder, the Federal Reserve is concerned about wage inflation. That's one of their primary things. But really, the two pretty much agreed. If you look at the behind the scenes stuff, the only two sectors that really added in the government's non-farm payrolls report was the government added and leisure. If you looked at manufacturing, et cetera, they all showed that hiring has slowed. So we didn't have a close to the upside today, but I think the market might digest this over the weekend, and we'll see how things trade out on Monday. But that was the big economic news. And I talked about this last night to our insiders meeting. The government is more data dependent now than they ever have been because nobody really knows what to do. Even the Fed governors are disagreeing. Some are in favor of a rate cut before the end of the year. Some are saying we might rate hike before the end of the year. And so every time we have some sort of an economic number, it seems to affect the markets. Let's take a look at the VIX. We want to see what the volatility is doing in the market. And we did break down to that 1250 level and below today. And if you're worried about that, then you might think that, oh, yeah, we're really ready to move to the upside. I want to remind everybody that we have been lower than this. 1250 has acted as support throughout this entire year. You can see back in December, 1250 has acted as support. We had that expanding triangle right in this area right here where we did have the breakout to the upside. We ran up to 15 and then we stopped and came back down. That's classic Elliott wave corrective triangle motives, MO. So we go up, we hit the exact amount that we were supposed to, and then we came back down to the point of the triangle. So everything is just classic Elliott wave corrective triangle action. Now we'll see where things go next week. To think that just because 1250 has acted as the low throughout this year doesn't mean we can't go lower. We've been down under 10 in the past with market rallies. It's something to keep cautious about, and I think that's the theme, that we still want to be a little bit cautious about where things could go from here, with the fact that we are down here below 12 and a half. But we've been lower, and it wouldn't be too surprising to see us go lower from here. But right now, at this point in time, and all we can do when we do these analysis is analyze the data that we have at the current moment. So we had the breakout exactly as expected. We had the retracement exactly as expected. And now it's, what do we do from here? So does the VIX go lower and the market go higher? Or does the VIX go higher and the market go lower? There's no way to know. We'll just have to wait and see. If we take a look at the chart of the DIA, that's been the chart that's been problematic. And you can see these gaps down. Very unusual to see such a vertical move with these gaps down on the DIA. but we have cleared that. And then we have this forecasted continued wave 5. And if you haven't gotten this software yet, go to hub.com, hubb.com. It's in beta form. The new software is awesome. You can get a copy for free. There's nothing to download. It's all browser based. You've heard me talking about this. They just add cool new features every single week. And then once the final version is released, you'll see the amazing amount of things that are on the plan for the software. But for now, it's still the best software that I know that exists from the world of Elliott Wave. So go to hub.com and get yourself a copy of it if you haven't done so already. But what we've done here on the DIA is filled all those gaps. So the DIA has caught back up. It was a little bit in front. And I would argue that with the wave 5 looking like it completed on the Dow, you would expect if it's less than 100% extension that you're going to go down and test the previous 4. That's exactly what we did. And now we're moving up. So I would suggest that this is a completed wave 5 with the retracement back to the previous 4. And what's happening now is the start of some new impulsive pattern. So how far can this first impulsive move go? There's no way to know that. I talk oftentimes about how big of a fan I am with using zigzags in the wave 3, commonly viewed as the strongest of all Elliott wave patterns, but there's no way to know where the A is going to end. We can trade the wave 3 with after a B wave correction following the A. We can see where the C wave is going to go. So we can trade that wave 3. We can trade the strongest wave, but you have to let the A wave play out. And that seems to be what's going on in the Dow. So follow along. You get intraday charts. You can look at what's going on an intraday basis. You can move over here. I like to look at 3-minute charts and you can see what's going on. Every one of those bars is a 3-minute bar. And then you can see the Elliott wave is included also on the intraday chart. All these patterns work no matter what time frame you're looking at. If you like a 3-minute chart like I do, or you prefer to do the end of day, whatever you're looking at, it will give you the Elliott wave signal. So you can see that we finished down in a wave 3 low on the DIA today on the 3-minute chart. But let's go back to the daily chart. So there's so many cool features on this software. Go get yourself a copy of it. So let's take a look at the TNX. If we look at the TNX, you can see that rates have come down a bit. They did bounce just a little bit higher today on rates. So we're going to have a little bit of a move to the upside. And I'm concerned about that because you can see the wave 4 was exactly at a 50% correction. So not only are we in a really qualified 5-wave pattern to the upside, the wave 4 here sitting right on 50% and a little bit of a bounce today. I've said that I don't know what could cause that wave 5 to occur to where we start to get a 5 handle on the TNX. But if we do, then that's not going to be good for the markets. So let's see if we continue this bounce higher in rates, but it's going to take more economic data with the fact that even the Fed governors can't agree on what the next move is going to be. We're in an area where you just be cautious, pick your trades, pick your spots, but you don't go all in one way or the other. But if rates start to go back to the upside, I think that's going to be problematic for the market. As we take a look at the chart of the dollar is holding here also almost identical to the chart of rates, which you would expect if rates go back to the upside. It's going to be supportive of the dollar. The dollar broke down from its expanding triangle, also right where you'd expect it to go, just like the VIX did. So exactly where you would think it would go. And the wave 4 is holding right at a 50% level. A little bit of a bounce in the dollar today on the back of the fact that rates ticked to the upside. So where do rates go? If rates go up, probably going to see the market go down. If rates hold steady, which is what I would like to see. I would like to see rates stay in a trading range. I don't necessarily want to see them drop too much because historically they're still low. But the market is really focused on where rates go right now. But if we can just stay in a range on the dollar, we don't have these wave 5s come to fruition, because if both of those wave 5s on the TNX and the dollar move to the upside to those targets, you're going to see a down market. The market is going to correct. It's going to break that all important 525 level that I've been talking to you all about for several weeks now. As long as we stay above 525, I think you have to be long the market. But if we break that, we have to go lower. So how do we know? We look at the bond market and we look at the dollar to see where those things are going. That gives us an idea of what's likely to occur. Let's look at the Qs. You would think that they had a bit of a tick down today, but not so bad, honestly, with the fact that rates did have a little bit of a tick up today. We do have a doji here. Some call this a gravestone doji. We're a little bit above the 10-day moving average, so the fact that we traded lower is not really a surprise. We were a little bit above the 10-day moving average. The thing that worries me is look exactly where we are on the wave 5, 161%. We're right at that extended level on the wave 5. And I can count on both hands the number of times, and I've been doing this for over 27 years. I've been trading Elliott Wave since 2001. So over 20 years trading Elliott Wave, the number of times that we've gone to the next fib level, which is 261.8. Normally 161.8 is the end of things. So does that mean rates are going to go up, the dollar's going to go up, and the Qs are going to go down? Or are we going to see a relabeling of this Qs chart, and that 5 is going to turn into a 3? I would submit to you that it's likely one of those two things occurs moving forward. But I was impressed that we didn't have more of a down day on the Qs today with a little bit of a tick up in rates. So I think that was kind of surprising. But if you're looking for where are the golden nuggets, where are the green shoots, where's the bullish part of the market, I think you can hold your hat on the fact that just the fact that the Qs didn't tank today is a big deal. Let's look at the IWM, the small caps, and you can see we have a little bit of a descending triangle here. We did break to the downside. So if you view the small caps, as some people do, as a risk on, risk off type of a indicator, then you would say, that didn't look so good. But remember, one day doesn't mean anything. We have to have the second day, the follow through or confirmation day. So what occurs on the IWM on Tuesday is going to be very, very meaningful. Do we come down to 200? Do we hold there? I've drawn a line there because we traded through the 200 level. It's not a really strong level of support, but we've traded through it. It could act as a little bit level of support, but I wouldn't hold a whole lot of faith in that, but it's possible. So let's see where we go on Monday. And if we follow through to the downside, then perhaps we're headed down to this level of 190 on the IWM, which just keeps us in this trading range that we've been in from 190 to 210. It's been that way for the entire year. We go back a couple of years and we've been in this range. We did break down and go from 170 to 190 for a bit, but we've been here in this 190 to 210 range. And maybe we just need to come down and test 190. But that's not really conducive to the markets moving significantly forward. I want to go back to the chart of the SPY because one of you asked about this, and I thought this is really important. If we take a look at the weekly chart of the S&P, and if you look at this, you can see that we've got a bit of a zigzag pattern here. We have a complex C wave. And if I go back and put this zigzag tool on, again, one of the cool features on this software is you can allow it to draw the ABCs for you, or you can do it yourself. But you can see that the 161.8% level is up a bit. But then if we look at where this complex C wave is, so we can go here and look right there. Now we're looking at a little bit lower level on where we can go on the weekly chart. We're starting to look a little bit tired with these extended moves on the weekly chart of the S&P. So it's still bullish. It still looks like we want to go higher, but we're starting to get to some extended levels on this. So you can see we didn't even make a 50% correction on the first zigzag pattern that I drew. So I think that adds into the fact that we want to still be bullish, but cautious. So it's not a back up the truck, load the boat, all the things that you used to hear, the terminology regarding the markets. All right, let's look at Bitcoin because Bitcoin has been interesting lately. We just get to that 70,000 level. We try to trade above it, and we just can't power above that wave 3 high. if we can get above 72,000 and move higher, then maybe Bitcoin is off to the races, but it can't do it. Every time we get up there, it gets sold into and we move back down. So we're in this trading range right now between 60 and 70,000 on Bitcoin. We're trying to see if we can get a breakout one direction or the other. We do have a little bit of a descending triangle that broke out. And as a reminder, I got asked this question last night in our insiders meeting. And by the way, we do that every Thursday night for our ewotrader.com alert subscribers. Do a live show on Mondays, and then we have an extended Q&A on Thursday nights. So you get an opportunity to talk to me live twice a week. But people were asking about this, and we saw this descending triangle. And the common nomenclature out there, if you go and you look, triangles will tell you a descending triangle is going to break lower, and the ascending triangle is going to break higher, and a symmetrical triangle can go either direction. I'm here to tell you that I kind of made my name in the world of options. I was contacted about the strategy that I was using around triangles. A book was written about it, and that's kind of how I got my name in the world of options. And that the gist of it is any triangle can break either direction. So the fact that we have a descending triangle here on Bitcoin and it looks like we're trying to break to the upside is key, but it's really not meaningful unless we can take out that wave 3 high. If we can, then maybe we're off to the races. Staying in the crypto world, we look at Ethereum, and we keep coming up towards this 4,000 level. Same thing, a descending triangle that looks like it's broken to the upside. You've all seen the news. The Ethereum ETF was approved. President Biden said if it came to his desk that he was going to veto it, but I don't think he thought it was going to get through the Senate, which it did. So both the House and the Senate passed it. So Congress passed it, and that kind of put him between a rock and a hard place. But we got to see Ethereum get above 4,000. If it does, then it's off to the races. So we're kind of in that upper echelon on both Bitcoin and Ethereum, but they have to break their resistance levels before we can continue to go higher from here. So those are very important. So that gives you a rundown on the cryptos. All right, now let's take a look at some of the stocks that you all are talking about and asking about, and we certainly can't get away from talking about GameStop. So let's go ahead and take a quick look at where GameStop is. And we look at that, you saw all the news, I'm not picking on anybody. I'm just going to give you general commentary. Roaring Kitty was going to come out and he was going to do a live stream today at noon. He didn't show up till 12:30, so he's 30 minutes late. And the expectation was that he was going to come talk the stock up in advance of GME's earnings. Once again, last night in our insiders meeting for alert subscribers only at ewotrader.com, I said that there's no way, in my opinion, it was just my opinion, that GameStop could come out with anything but disappointing earnings. They're struggling to move from a brick and mortar type of a scenario into a scenario of online gaming. And I think GameStop kind of smelled out what might be coming. I give the management major kudos for this. And they announced their earnings early. They announced them this morning before that big live stream was going to come out. And it was greatly disappointing on the earnings, exactly what I thought was going to happen. And you can see we opened up here and just sold off hard to the downside because the earnings report was really disappointing. So where, the whole Netflix series, et cetera, has been talking about this whole thing with Roaring Kitty, et cetera, who is really helped the most is GameStop as a company. Because back when we had the pandemic and they had that big run, they sold a whole bunch of shares to shore up their balance sheet, and they did it again with these things. So GameStop as a company is being able to be stayed alive through all this. But from a retail trading standpoint, it's so risky. The volatility is so great. I encourage the average retail trader just to watch it, but stay away from it from a trading standpoint. A few people can make some money on it, but the most people lose money on it. And this, I don't think, played out as expected. It was unexpected that GameStop was going to come out and report their earnings this morning before that live stream came out. And then you can see the bar is a pretty ugly bar here on what ended up happening. As I spread the chart out, you can see where we closed. And then if we go to a 3-minute chart on GameStop, you can see that that was pretty ugly, right? I mean, the high of the day was back near the open. and then we went down and just had a pretty negative day. And so I hope that if you're watching, you didn't get hurt by this today, but please understand that it is not that easy to make money. I was on commentary that back when the meme craze was going on, that there were institutions behind it. The expectation here or the speculation here, and again, all I'm doing is reporting what I read. I don't have any facts that I'm giving you. It's my opinion, and what I've read from others is that was a big crypto player behind this move, behind the whole roaring kitty phenomenon. It wasn't necessarily a trading institution. The last time that it occurred, the institution got called in front of Congress to say, "What are you doing with this whole thing of let's just go long all these highly shorted stocks?" Well, the retail trader doesn't have enough power to cause institutions to cover short positions. But if an institution comes in with the big volume, they do. And so there was a institution that was following along with all of the rhetoric that was going on through all this talk, and they came in and they caused the movement. Few people made a lot of money, but as I said, the majority of traders missed out on it and lost a lot. Same thing occurred today. So please just stay out of this space. Watch it. It's too risky in the world of trading. There's enough risk in general trading to get involved in stuff like this. So I just encourage everyone to stay away from this. As we continue on in the stocks that y'all ask about, one of them is oil. So we look at USO. And before I get into the chart of USO, just want to remind everybody that every single month this year, we're giving away one of our level 3 subscriptions. And that's to our impulse strategy, which is AI based, it's a directional trading strategy, our volatility strategy, which is looking for those triangles that break out, and our time strategy, which is stocks that have dropped down, and that's an income based strategy. And it's worth thousands of dollars depending on when you were to buy in. And we're giving away one of those every single month. And all you have to do is post a comment underneath this video and you're registered for the drawing this month. Well, I'm going to sweeten the pot this month. We're going to have an extra, we're going to have an auxiliary drawing, if you will. I've been traveling a lot, which is probably why I'm stuffed up right now. And I want to show you a picture here. So this is an extra drawing on top of the regular drawing. If you can tell me whose house that is and where it's located. So you have to give us both. So post a comment on whose house that is and where it's located. We're going to do an auxiliary drawing for one of those level 3 subscriptions. So you got 2 chances to win this week. Post who you think house that is and where it's located. And we'll do a drawing this week. And then just post a comment and you're in the running for the monthly drawing. And if you go to our website at ewotrader.com and look at the performance, you can see how AI has enhanced the performance. I've been doing this for a long time. You don't last this long if you haven't been successful, but the AI infusion has greatly enhanced that. So anyway, let's get back to the charts. We look at USO. In all my travels, I've commented that, boy, there are a lot of cars on the road. And the fact that we had this expanding triangle, another triangle, broke to the downside. They work the same way as consolidating triangles, just the points on the opposite side. So we broke down. We got awfully close, I think, to the point where OPEC may have come in and said, hey, we're getting a little bit low on oil, because OPEC has told us they know that there's a limited amount that they have in the ground. They want to make as much money on what they have in supply as they can. So I don't think they're going to let the price of oil go too low. I was a little surprised to see that it was a downside breakout, especially with what I've experienced in my own travels, which is a lot of cars on the road as we move into the highly driven holiday season, the summer season, where everybody seems to take vacations, etc. So I was really surprised to see the downside breakout, but oil has recovered, moved back to the upside. We did close below the 10-day moving average, so we have to keep an eye on that. But right here, we held this low here. I think if we come down here to 67.5, that's support. That's been support for the entire year. If we were to get down there, I think you will hear OPEC come out and talk about production cuts. I don't think they want to see the price of oil go that low. So again, I was surprised to see that it was a downside breakout, but yet we've recovered here and we're right back to the 10-day moving average. And if you follow LA Wave corrective triangle rules, you would say that we're probably going to come back up here to 75. get to the point of that triangle, the 50-day moving average, and then we'll see from there where oil goes. So pretty interesting stuff there. Note that on this zigzag pattern, we stayed at the 100% extension for the entire month of May. And then we broke down. But where did we hold? Right at the 161.8% level. So if you're watching this and you're fairly new to Elliott wave, Fibonacci, etc., this is the place to be. This is why we watch these things, because it works. Look at that. Just look at the chart. We held sideways for a month at the 100% extension. We went up to the previous fib level, which is the basis of Elliott wave rules before you go to an extended level. And the next extended level from 100% is 161.8. And that's exactly where oil went and held and moved to the upside. This stuff works. Add this into your trading repertoire. And that's why I'm here. I want to help the average person. Most people know that I had a 13 plus year as a golf professional. And then I moved into the world of finance. I was a registered investment advisor for a couple of years. I didn't like that environment because everything is geared towards the institutions. They have the big volume. They have the big power. I want to try to help the average person. And that's what I am. I'm just the average person that's been doing this for a long time and trying to share some knowledge and education that I've gained over 27 years with you. That's all I'm here for. Anyway, that's USL. Let's take a look at Tesla. We haven't talked about Tesla in a couple of weeks, and there's really still not much to talk about. It just goes dead sideways. It hasn't done anything. So we have this triangle pattern here, and we're just moving in the upper end of the line. We're kind of invalidating this type of a triangle. So let me take that lower line off, and then we can stay with the upper line. And it looks like we're moving more into a descending triangle. So if I just take this line here and move it over, you can see there's the descending triangle. It's not that big, so we're from 170 to 200, so about a 30-point move is forecast out of Tesla. No way to know whether it's going to be to the upside or the downside. We did hold down here at 150, which was kind of in the middle of no man's land. If we break that level, I think we're going down here to that line that I've drawn at 100, but we're nowhere near that yet. We'll see how we handle this descending triangle. If Tesla can somehow manage to break to the upside, it's got a whole lot of resistance at 200. So I think you just watch Tesla right now. If it breaks down, it's got to break below this level here that held in the 160 area. Then we probably come down and test this wave 5 low. If we break that wave 5 low, then we go down to a 100. So that could be a great downside trade. But we could easily break to the upside and test 200. But if you're bullish on Tesla or you're itching to get in, I still think you have to wait and let Tesla get above 200. If it can break above 200, well, now you've got something. And I think Tesla could run, and it would run quickly up to 250, because this move from 250 down to 200 was just big 45-degree angle. So if we could break 200, there's nothing to stop it from going to 250. But if it breaks to the upside out of this descending triangle, it has that 200 level to work on. So it's going to take some time to break above that. So let's let Tesla break from this triangle, and then we can look at what direction that we want to go from here. So looking at some other stocks of interest, AMD is one that y'all ask about a lot. And with interest rates doing what they are, NVIDIA, we need to talk about NVIDIA as well. So I'll bring that up next. We'll look at the chart of NVIDIA. I wasn't going to leave that out because we have the 10-for-1 split after the close today. We're going to trade post-split on Monday. So we will look at that chart. I'll have some commentary there. But looking at AMD in the same space, it's just gone dead sideways. They didn't announce a 10-for-1 split like NVIDIA did. So you can see that we're just going sideways. We've been here for 2 weeks. We're in a trading range here on AMD as well, from 150 to 175. We need to either break below 150, then it's a great short because we're coming all the way down here to 125. If we break to the upside, then you have some long potential here because we're going to be coming up to at least 200. So once again, just watch it. There's no reason to jump into these things. Be patient. That's when you make the best trades. There's nobody gets in at the exact bottom and the exact top. And if you're trying to do that, you're going to drive yourself crazy. What you want to do to be a successful trader over time is take a chunk out of the middle. So when we have these things where there's not really a clear signal one way or the other, let the market give us a signal, and then let's listen to what the market tells us. and then we can trade according to that. And we don't have to hit the exact top when we get out. You generate a gain in the trade. If you're happy with it, take it and move on to the next one. So that's what I'd say about that. So let's go ahead and bring up NVIDIA, which wasn't on the list when we started, but certainly we need to talk about NVIDIA, where we're going to trade post-split. I mentioned to this because some people had asked if this was a good short on the live shows that I do after it announced this split and it moved to the upside. And my commentary was, don't short the stock now, not before the split date, because stocks tend to hold in. Who would sell their shares before the split? If you were already owning the shares, where would your motivation be to sell the shares into the split? So there was no reason to go short and try to fill this gap here. And NVIDIA just continued up and then consolidated. Now we'll see what happens on Monday, because what normally happens, and that was a question asked last night as well, is when you have people that have owned this stock and you go in for a 10-to-1 split, a big split like that, what usually happens is people will sell part of their position. But if you're a believer in the long-term story of NVIDIA, where they keep coming out with new chips that everybody has to have, they sell some of the position, but they hold some of it. So we may get a little bit of volatility on Monday or Tuesday, maybe even a little bit of a drawback. And then the whole idea of splitting a stock is to make it more attractive to the average investor. That's why companies split stocks. Instead of buying a share at $1,100, you can buy it at $100. Makes it more attractive to the average trader. That's why stock splits occur. But people have this view that on a stock split, the stock turns and immediately goes higher. Sometimes they do. And maybe NVIDIA does that. But I would submit to you that it's worth waiting and seeing what happens on Monday and watch and see if it moves lower. And if it does, let's see what happens into Tuesday. Let's get the people that want to sell some of their shares out of the way before the next wave of people come in that want to acquire some. Maybe it's all on the retail side. If it is, then we're not going to see the volatility that we've seen in NVIDIA. Maybe it doesn't go as high as fast, but maybe some institutions that haven't been NVIDIA will use this as an opportunity to get in. So perhaps we have a pretty significant move post-split. There's no way to know the answer to that question. I'm just saying, be cautious moving into it. I've said it since they announced the split, and there was no reason to short it, and that's been the right move. Stay away from it. Don't short it. I didn't necessarily expect it to move another 100 points or so higher, which it did, but I didn't expect it to go lower, which that was correct. So let's see what happens when NVIDIA trades post-split next week, and then maybe you have an opportunity to get in if you've missed this move. And we move from there. But again, don't expect the kind of volatility to the upside that you've seen in the past on NVIDIA. It's not going to be there. All right. So want to take a look at an international market before we wrap things up for this week. I'm going to give you a bonus trade here real quick on UNG. And that wasn't on the list as well. I have no idea what's going on here with natural gas. We came down here. We held 15. We're in a season that's normally bearish for natural gas. And we have a really nicely formed zigzag to the upside. So let me go ahead and show you this zigzag pattern. I know we were off last week, did do the recording, but since I was traveling, it didn't come out well, so we didn't post it. That's a 50% correction. That's showing that natural gas could move up to 25. Why? We're moving into the summer months, and that's not normally the time for natural gas to move higher, but maybe that's the exact reason that it moves higher. But you can't diss the fact that that is a well-formed zigzag pattern to the upside, and I think you can be bullish on natural gas unless we come down here and break this B wave at the 17.5 level. If we break below that, then all bets are off. But until that happens, then I think you can look long on UNG. And so the last one that I want to give you is one that we've been talking about over the past few weeks, which is on Japan. And they went through a program where it was very slight, but they did raise rates for the first time. They've been zero to negative rates forever, it seems like. And then we had this triangular formation. We had a false breakout to the downside, and then we had a false breakout to the upside. That can't happen. I can tell you in the world of triangles, that doesn't happen. So we take these off. What that means when you see a scenario like this is that the triangle has expanded. So we have a different triangle formation. And we look at that now. And so it wasn't a symmetrical triangle. We now have an ascending triangle on the EWJ. So you never get two false breakouts. You get a false breakout one side, but never on both sides. If it looks like that, it looks like the formation on the EWJ. I'm telling you, it's forming a larger triangle, and that's exactly what's happened here. So now we have an ascending triangle here on the EWJ, and we look from 65 up to close to 70. So we have about a 5-point move coming out of the EWJ. I can't tell you what direction it's going to be, but I can tell you the EWJ is going to break about 5 points one way or the other from here. And we have the 10, 30, and 50-day moving averages all converging here as they have been since the middle of May, right at the exact same point, right near the point of the triangle. So keep an eye on that. If we can break to the upside here, the wave 4 came right to the 50% level. And the temptation would be, oh, the wave 4 is it right at 50%? That's going to be an upside breakout out of this triangle. And it might be. But I'm just telling you that based on triangle rules, you can't pick a direction. You have to respect the fact, and Elliott said this himself, triangles trump the 5-wave patterns. And that's why we're so proud of our education at Elliott Wave Options, ewotrader.com, is we dispel the myths, we dispel what's commonly viewed out on the internet, and we go through what's really true. I've read everything that Elliott's written, even his notes, aside from published materials. And he said that triangles trump the 5-wave pattern. So you look at that and you say it's going to break to the upside. Maybe it does. But I'm telling you that if Elliott himself was here, he'd say you have to respect the fact that perhaps we move lower on the EWJ out of this triangle. But we're going to have about a 5-point move, and we'll just wait and see which way that moves. Thank you, as always, for watching. Have a great weekend. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.